You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 16th day of November, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office or away from your desktop, just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box. The chat box is there so that you can ask questions, participate in the discussion. Let's open with a word of prayer. Heavenly Father, you have entrusted us this stewards of your creation. We ask that you guide our hearts and minds as we make our decisions. We seek you first in all we do together. May we always be mindful of your presence. We confess we are nothing without you, and our trust is in you completely. In Jesus' name, amen. Well, happy Monday. Hope you had a good weekend. Let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Oh, I'm going to have to put you on hold 1 second. I'll be right back. Don't go away. Okay, my apologies. Sorry about that. All right, I said I would give you the numbers from around the world, and I will do that right now. Just pull in some fresh data. All right. Here in the U.S., the Dow is up 413 points. NASDAQ, now that's 1.5% for the Dow. NASDAQ is up 73 points. S&P 500 up 35. That's just shy of 1%. And the Russell 2000 up 40 points. That's a gain of 2.25%. And in the commodity basket, crude oil up $1.25, trading 41.38 last, gain of a little over 3%. Gold up $8.10, trading 18.94.30 last. Silver up 9 cents, trading 24.87 last. And in the Asian markets at the close, Nikkei posted a gain of 521 points, a little over 2%. Shanghai gained 36, a little over 1%. And the Hang Seng added 224 points, almost 1%. And in the European markets, at the close, FTSE posted a gain of 105. That's a gain of 1.5%. The DAX rose 62. The CAC rose 91 points. That's 1.75%. So, against this backdrop of the pandemic reasserting itself, the election overhang, and the Empire Manufacturing Index missing its number today, we've got, believe it or not, a green day in Asia, green day in the UK, and it's a big green Radio Monday here in the US of A. With that, Michael or Valerie, I believe, is going to do a quick recap of the live trading room this morning. Today's show will not be a long show. In fact, it'll be pretty short. But I do believe Valerie's going to come in. Are you there, Valerie?
I am. I had two buttons to click.
Yeah, I didn't know if you were coming or if Michael's coming or if we're just going to skip that part today.
He just texted me that he's not going to make it. So if you're good, I can do a recap of the recap for what he did in the first 40 minutes this morning.
Oh, okay. That'd be great if, yeah. For those of you that haven't heard, Michael's got the COVID.
Yes. And his symptoms, he's up and down. There's no consistency in his energy level and ability to focus. But he did open the live training room for us this morning, and he got the goal for the day. It took 4 trades and 18 minutes to get to $130. While he was there till about 10 after 10 this morning Eastern time, and he took a total of 6 trades, 3 on the crude for 10 ticks, so that would be $100 on crude, 3 trades for 8 ticks on gold, which would have been $80, and 1 euro trade for 6, which is 37.50.
Now,
the markets
you weren't planning to grab the charts, right?
Oh no, I just.
Okay. Yeah, no, that's fine.
I didn't mark his trades, so I didn't prepare. I didn't think.
No problem.
Thought I would just talk.
Okay.
There was very little follow through most of the morning during the trading session, and I stepped in afterward and helped our traders see our setup in the live training room in the 4 markets that we trade, and on a couple of occasions had some great opportunities, and there were also a couple of trades that would have ended in a stop out. So the truth about trading. We appreciated you jumping in this morning, Dwayne, and showing us how we can incorporate the longer time frame charts into our short-term trading. So that was a bonus for us this morning.
Well, thank you very much for taking over, and you did an excellent job, and I know that everybody there agrees with me. You and Michael are doing the exact same thing. You just both have different ways of explaining, so I know everyone benefits from that when you're able to come in and be a part. So we appreciate it very much.
I agree, and thank you
Good
very
job.
much. I enjoyed it.
Okay, guys, I've got up a daily chart. Now, last Monday, we put in a new all-time historic high intraday at 36. You can see it on my screen. 36.68. And the last, well, we drew a trend line from this swing high, now this is the daily chart, to this swing high to, at the time, that swing high. That day was followed by a doji, and then we managed to break above the trend line. We made the run, but price didn't stick. It ran up and it ran right back, and then we spent the next 3 sessions just sitting right on top of that trend line. 1, 2, 3, 4 days. Now, this is Friday, so we closed bullish on Friday. Now, the closing price Friday was 35.82. This was a window of opportunity we drew the other night in the workshop. Slide it over so I can read the price. There we go. So last night the open was 35.87. So it doesn't look like much of a gap, but the numbers again, Friday close 35.82 to the open last night at 35.87. Yep, 82 to 87. Somehow I looked at this morning on the other chart. It looked like it was bigger than that, but that's exactly what it was. Now that gap hasn't filled. On index futures, the gap almost always closes. Typically, we'll see the gap close within usually a couple of hours on a Sunday night. Now, stocks tend to gap open every day. They either gap higher or they gap lower. Futures, because we trade around the clock, you don't see that same dynamic. Except in earnings season, sometimes if you have one of the big names report after the bell and it's a big hit or a miss, you might see a little gap. Typically with index futures, we only see, because they're futures and they do trade around the clock, we see those gaps on Sunday nights. Okay, and that's one of our favorite trades. Historically, for the last 120 weeks, we've traded almost every gap open on Sunday night and done quite well, with the exception of last night. The way we gapped and ran, normally you'll get a gap and then it'll fade back, close the gap, and then if it's going to continue, it continues. Now, as you can see here on the daily, we're well off the session highs. In fact, if you look at the high of these two candles right here, if you look at the horizontal line on my cursor and follow it across, we broke that area of resistance. It took 1, 2, 3, 4 till last night, and so now the market is attempting to take out this intraday high, the all-time historic intraday high, and it's struggling to do it. So on our Logic 247 alerts so far this week, we got a total of 9 alerts issued, still waiting on the results of 3. So we had 6 actionable alerts. On the alerts, we don't want to risk more than $300 per contract, per trade. Less, when possible, based on a simple 3-step methodology that we use based on market structure. In the live training room, when you're just first learning our methodology, learning our strategy, we only risk 8 ticks, and we risk 8 ticks across all the markets, every trade, because we're trying to teach you the strategy and the importance of always having a hard physical stop in place. Once you progress, learn the methodology, learn the strategy, and you start doing one-on-one mentoring sessions with me, as you start trading at larger time frames, if that's your goal, then I will teach you that, of course, the 3-step method that we use. And again, it's not a formula, it's not a percentage of anything. It is simply based on the structure of the market. And we only use a couple indicators. The green line, we call that the BBC, bull bear cross. When price is above it, we're bullish, we anticipate higher prices. When price is below, we're bearish, we anticipate lower prices. Higher, lower, higher. Now, whatever happens here, eventually price will revert to the mean, and our mean is green, the BBC. Pullbacks to the BBC hold more often than they don't. As you can see here, pull back, pull back, pull back, pull back. And then once we had a bearish cross, looking for lower prices, we get a leg, we get a retracement to the BBC where again it holds. Then we get a leg, and then we always come home. We always come back to the BBC. And so we consolidated here in this case for 1, 2, 3, 4, 5, 6, 7, 8 sessions before we finally were able to take out this swing high, which gave us a lower high. So we had a high, a lower high, and then a lower high, and then we broke out and pulled right back. And then this entire past week has been very difficult for traders of all kinds. It doesn't matter what methodology or strategy you use. Whenever the market is near, whenever the S&P is near all-time historic highs, it has an effect on all of the other markets, especially the indices, but it also has impact on crude and gold, you name it. Now, I showed you the Logic 247 alerts. Let me show you what those look like in the channel as they come out. We're on week 120 of Logic 247. Last week, week 119, we had a total of 50 alerts issued. 16 of them never triggered, and that's because the market in this consolidation that it's doing is very little follow through. So we had 30 actionable alerts, 7 stopped out, 21% of actionable alerts stopped out. What we've averaged over the last 120 weeks is 20% of actionable alerts being stopped out. And so last night at 6 p.m. Eastern, that's when the Logic channel opens, 6 p.m. Eastern, and stays open around the clock, just like the futures market, until Friday afternoon at 5 p.m. Eastern. The criteria for posting an alert is whenever opportunity presents itself. So because we have traders around the world, our day session is their night session, and vice versa. So at 6 p.m. Eastern last night, the first alert came out. Now the time you see here, this Mountain Standard. Arizona doesn't do daylight savings time. So 8 months out of the year I'm on Pacific time, 4 months out of the year I am on Mountain time. And the Telegram app, which is, we have a private channel that we use for the alerts, the weekly trading zones, all of the stuff that we do. We have a discussion group. If you're already a passport holder, you should be joining in the discussion group. You'll learn a lot, and there's a year or more of history in that discussion group as you scroll up. So you'll see all kinds of questions and the answers and the charts, trade setups. That's where you want to be. So we had a long last night, Logic 247 on the S&P. To be long, buy 36.12, initial target 36.14, and then the final trade to target on any trade. If it's a long, it's the weekly trading zone overhead. If it's a short, it's the weekly trading zone below. On this particular trade, $150 per contract traded is what the market made available. So we did make it up to the weekly zone. And then the Dow was also long with an initial target at 29,700, a final target at 29,740, which we made and then some. But the initial move, the market made $165 per contract available. So waiting on that NQ. There's gold, which was a long. Crude, which was a long. Russell, which was a long. Silver, which was a long. And an ES that we're still waiting on, and a crude that we're still waiting on. So those are the logic alerts so far this week. Now the concierge trade alerts work a little bit different. Those don't come out as opportunity presents itself. The concierge trade alerts come out as a static report right after the Globex open each evening. Okay, and so last night I got them out at 6:50 p.m. Eastern, 4 Mountain. On the concierge, you've got a long number and a short number. The price reaches 36.12. We want to be long and or looking for long trades. Price hits 35.45. We want to be short and or looking for short trades. S&P, Dow, Russell, Crude. If you want to grab a screenshot, go ahead. NQ, gold, and silver. All right, so we'll go to the 30-minute chart of the S&P. Here is that long entry. The concierge trade alert was 36.12. And in this case, the logic alert was 36.12 as well. Sometimes concierge and logic numbers entries will be identical. Other times the concierge may be, in this case, a little bit higher, and then the logic alert gives you an entry that walks you right up to the concierge. So as you can see, we triggered 36.12. We hit last week's weekly trading zone at 36.16. So that's 4 points at $50 a point. It's $200 per contract traded. Important prices, important areas are almost always tested. So price gets back below the trigger, and you'll notice it also pulls back to the BBC. As I said, pullbacks to the BBC hold more often than they don't. So we trigger again. This time, we not only make it to last week's zone at 36.16/17, we put in a swing high up at 36.37. So about 25 points. Now, of course, getting out of the swing high is not something you can count on or depend on, because you don't know it's going to be a swing high or swing low until after the fact. So we get back below the trigger, and we do it again. So we have 1, 2, 3 triggers. I think it was last Thursday or Wednesday, the S&P had 7 triggers off the Concierge Trade Alert. Scroll back. Yeah, it was on this day. The night of the 11th, which of course carried over into the 12th. 1, 2, 3, 4, 5, 6, 7 triggers. So when I say important prices, important areas are almost always tested. Whether it is a logic alert entry, a concierge alert entry, or weekly trading zone, that's an important price, important area. Now the weekly trading zones are published every Monday morning at 6:15 a.m. Eastern for all of our members. We've been publishing the zones since December 14th of 2009. And price tends to consolidate at the zone. Only one of 3 things happens at a zone: consolidation, like we're seeing here, rejection, or what we call the slice. If I come across one of those as we walk through the charts, I'll point one out. Okay? So on the S&P, both logic and concierge said to be long 36.12. We expected price to run into resistance. When price rises to a weekly trading zone, we look for resistance. And when price falls to a weekly trading zone, we expect support. Same thing with the BBC. When price pulls back to the BBC from above, we look for support. And when price rises to the BBC, we look for resistance. Okay, and here's another example of a pullback to the BBC, which also it looks like it just barely took us below the trigger, which means we've got blue and climbing overhead, which is bullish. This indicator is called the CFMA1. Let me put it back on the daily for a minute. Blue and climbing is bullish. Red and falling is bearish. When price gets above the BBC and you have blue and climbing, this is called a bullish cross, that's called a bearish cross, and this is called a bullish cross. Now, once we put in the high, whether we take that out or not, when we pull back to the BBC, and price always reverts to the mean, once we pull back to the BBC, we expect it to hold. If it doesn't hold, then the price where this bearish cross took place, that will be important potential support at 34.26. And then from the pandemic low to this new all-time intraday high, this is the 24% fib retracement. We would expect support there and there. Major area for support is down here at the 38% fib. Also where there's a bullish cross that hasn't been tested yet by price. So as price comes down, and with all this country's facing, with all the world is facing right now, this rally seems a little bit of a surprise, but one of the worst things that can happen is when we start trying to tell the market what it should do. Well, I know it can't go any higher than this, or well, we definitely aren't going any lower than this. Market can do whatever the market wants to do, and it does it, and you have to be prepared and ready to trade whatever's in front of you, because whatever the market does, the market's really not interested in what we think. So back to the 30-minute. Okay, we'll go to the Dow. Last night's Concierge Trade Alert on the Dow was to be long 29,675 and 29,740. That was last week's highest weekly trading zone for the Dow. And so from 29,675, this first little run up, now you'll see again, we got multiple triggers. Ran up to 723. So that's 25, 40, about 45 points. At $5 a point, that's $200 per contract traded. Back below the trigger, up we go again. This time we hit 29,714, and then back below the trigger, and the big move, which came at, make sure I've adjusted my time zone on this chart. Keep meaning to walk through them all, and I have to change this twice a year with the daylight savings time. So we're back below. And as you can see, price, as it hits red and falling, resistance, pushes price back down to the BVC, which we expect this to be support. This is resistance. And so price will ping back and forth between these two until either buyers show that they're more committed to their positions than sellers, or sellers show that they're more committed than buyers. So far, buyers have the ball, and we're just above last week's highest weekly trading zone. Next on the Concierge list is the Russell. On the Russell, Concierge Trade Alert was to be long 1771. So we put in an initial swing high at 92. So that's 20 points at $50 a point. It's $1,000 per contract traded. Price pulls back to the BBC and gets below the trigger. And it runs from 71 to 86. That's about a 15-point move. Again, the Russell pays $50 per point. And we're just consolidating. Now, price, as it pulls back to the BVC, we've still got blue and climbing overhead. But if we find support here, as the market begins to move higher, what you want ideally when price is climbing and you're taking a long trade is you want to see price on the left side of blue and climbing. Once blue and climbing gets above price, like it is right now, that can still act as resistance, because once blue and climbing gets above price, then you can anticipate resistance, and this will become red and fall. You see how it happened right here? Price rallied up into red and falling, and then as price began to move higher, it switched to blue and climbing, which is bullish. We're above the BBC, and so we get it looked powerful at the open last night, and then things, well, you can see a lot of anticipation and anxiety just around the world. Traders, from institutional traders to retail traders, what happens next? And God did not give any of us the ability to change the past or know the future, and those two things are inextricably linked for eternity. So if we can't know the future, what we can know is what the next high probability move is, based upon our very simple strategy and an understanding of how these indicators help you to better see what price is doing. See, without this, it would appear that we're starting to sell off and head back down to the support area. Put the indicators back on. Support, support. And again, we will anticipate support on this pullback until proven otherwise. If price gets below the BBC, then we'll start looking for short trades. But as long as we're above, so we had this bullish cross back on Friday the 13th. So we had a lag and a retracement, a lag and a retracement. Last night we did have that gap open. Pull back to the BBC, a lag, a retracement, a lag, and here we are. Price pulling back one more time to the BBC. Next is crude. Last night's concierge alert for crude was to consider being long at 40.95. Last week's highest weekly trading zone was 41.25. So on Sunday nights, we are still using the previous week's zones. The new zones are published Monday morning at 6:15 a.m. Eastern. But the zones from last week continue to hold sway over the market into the new week. Monday, even into Tuesday. As the week progresses, the new zones tend to kick in. And what the zones do is they provide our traders with a reference point of fixed support and resistance for the entire week. Once they're published, then that's it, carved in stone. We don't massage them, manipulate them, change them. So we did exactly what we anticipated. We hit 41.25, which we expect to be good resistance. Just as when price pulled back down to the BBC and the weekly trading zone. That's good support times 2. We had a lag and a retracement, a lag, a retracement, a lag, a retracement. Question now, we're sitting on support at last week's zone and the BBC. So we anticipate an up move, but we know because we have red and falling overhead. Over here, see on the first trigger, on the second trigger, we had the support of blue and climbing. While we have support at the BBC, we've got potential resistance at red and falling, just like we saw in the other markets. All right, next is the NQ. And of course, John's still sick too, so keep him in your prayers. He's been down and out for, gosh, been about a month now. Last night on the NQ, consider being long 12080, and we never quite made it up there. Price, once we had red and falling overhead, it took price right back to the BBC. And so when this happens, this is a decision point. We know that price is going to do one of two things. We expect it to hold, because as I've shown you, it holds more often than it doesn't. But we know that there will be times it doesn't hold. So we have to be patient through this consolidation period so the market shows its hand and lets us know what it's really trying to do. And it was trying to get to the weekly trading zone below. Think of it this way, price is always trying to get to a zone, either the one overhead or the one below. And the way you know which it's trying to get to, if you're above the BBC, you're trying to get to the zone overhead. If you're below the BBC, you're trying to get to the zone below. So we never triggered on the long side for the NQ. The short side did trigger at 11,890. And we put in a swing low at 11,851. So that's just shy of 40 points. Now the NQ pays $20 a point, so we'll call it 35 points. That's $700 per contract traded, right there. So a bearish cross, found support at the weekly trading zone. Buyers came in, scooped it up, got us above the BVC. We're pulling back. We've got blue and climbing. Unlike the other markets we just looked at, we're not pinched between the two. We have support times 2. Pull back to the BBC and blue and climbing. So the next high probability move from here will be to the upside. Now, just because that's the next high probability move, it doesn't mean that's what has to happen or will happen. But it is the next high probability move until proven otherwise. If price closes below the low of this candle, okay, then that puts us below the BBC. Blue and climbing will become red and falling. So I'll show you here. We've got a potential window of opportunity up here once we take out this swing high. And once we take out that swing low, the short opportunity will be right here, back down to the weekly trading zone. So for the NQ right now, we have to be patient, let the market show its hand. So if this candle closes red, it will be looking to get short back down to this weekly zone and also the trigger. Remember, important prices, important areas are almost always tested. Even this little move here from 890, we put in a low at 83. So it's 7 points, $20 a point. It's $140 per contract traded. Next is gold. GGCG. CZ. Now the long side for gold last night was 1901, which we never reached. The short side was 1882. And from 82, we made it to 62. That's a $2,000 per contract move. Buyers obviously liked that price, came in, and ran it all the way back up to that zone at 1891. Now you'll notice the swing low last night. So this, you're always looking left. When you cross the streets, you got to look both ways. When you're trading, you need to look left. So as this thing's coming down, you look left to see where might this move find support. Initially, you would be watching this swing low, this swing low, this bullish cross right here. See how this bullish cross lines right up with the bottom of the bodies of those two candles right there? And then finally, the buyers who were committed at this price and ran us up from 1861 to 96. They were just sitting here waiting for another opportunity to do it again. Now we've just had a bullish cross on gold. Remember, the pullback holds more often than it doesn't. So we'll watch to see if we find support here. Price might begin to consolidate at the BBC. Then we look for a potential move back up to last week's zone, and then this swing high. And if we take out this swing high and the swing high from last night, then we'll be looking at 1901 for potential move up to 07. Last but not least, silver. Zone to zone, back up to the zone. The long side last night for silver was 24.93, and the swing high was 25.15, so about 18 cents. Now, when the price of silver moves $1 move in silver, that's worth $5,000 per contract traded. So from 24.93 $25.15. And on the short side, 24.26, and price did not quite trigger. So there you have it. There's a walk through the Logic 247 alerts, the Concierge Trade Alerts. And the ES here still consolidating right at the trigger, right at the BBC. If we take out this swing high, that's potential resistance. If we trigger again, if we move above last week's zone, potential resistance, resistance, resistance. Okay? So, I thought it'd be a quick one today. Let's go to our good word for the day. Last week we were talking about how to overcome discouragement. We'll continue that. Nehemiah 4:14. Fight for your families, your sons, your daughters, your wives, and your homes. Now, traders are usually one of two places. They're on top of the world, dancing on their desktop, or curled up underneath the desk in the fetal position. Extreme highs, extreme lows. What you have to learn to do is to control your emotions, take emotions out of the picture completely, trade exactly what's in front of you based upon your methodology or strategy, whatever it might be. Nonetheless, traders, even the best of the best can get discouraged. So you have to actively learn how to fight a gloomy outlook. Attitude is a little thing, but it makes a big difference. Depression, gloom, pessimism, despair, and discouragement stop more people than all the world's combined illnesses. The truth is, enthusiasm will take you where talent alone can't. Think about it. Every day, talented people give in to discouragement and quit, while people with less talent and ability keep going and succeed. Winston Churchill said, "I am an optimist. It doesn't seem too much use being anything else." If you really believe that God is on your side, You'll be optimistic even in the face of overwhelming obstacles and discouragement. In the Old Testament, a group of former captives rebuilt the walls of Jerusalem in just 52 days and went on to prosper. How did they do it? Because their leaders said, don't surrender to discouragement. Don't give it an inch. Fight every step of the way. And that prescription still works today. One of the enemy's favorite weapons is discouragement. He knows you can never be defeated unless you're defeated first in your thinking. But you have the power to overcome the enemy. In James 4:7, the Bible says, submit to God, resist the enemy, and he will flee. When the enemy brings discouragement to your door, don't open it. Don't invite him in. Don't accept the package. Don't sign the receipt. Instead, submit to God and resist the enemy. From time to time, we all experience fatigue, frustration, failure, and fear. But by standing on God's promises and drawing on His strength, you can choose not to get discouraged. The choice ultimately is yours, and that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.